Hey, we're going to get rolling here today, and I got to admit the USDA gave us some fireworks, so we're just going to head right to the numbers in here right now. Everyone wants to talk about the acreage. We want to talk about the acreage in here right now. The big number, and this is on the far right, is today's corn acreage number at 89.5 million acres. As you can see, that's down almost 4 million acres from a year ago. 2.5 million acres below trade estimates. That pushed these corn futures up the daily limit at one point. If you look over on the negative side of it, you got to say, hey, look at the bean acreage number at 91 million acres, a little more than 2 million acres above trade's expectations. The wheat acreage at 47.4 million acres, I mean, that's just a so-so number. There's really nothing there. You've got spring wheat acres at 12 million acres, slightly above a year ago in both trades expectations. But if you're bullish, the focus is on the corn acreage number in here right now. If you're a little bit more bearish, it's towards beans, and wheat is a toss-up. As we look towards the stocks report, and let's just be honest with ourselves here, there's just really nothing surprising on this report. As you had our March 1 stocks right pretty close to where the estimates are, we just won't read a lot into the stocks number. Now, when we take a step back on this report and we look at how the market is positioned in here right now, the one thing that sticks out to us is the old crop, new crop corn spread. We got a July D's corn spread in front of us right now. As you can see, during the month of March, that spread's already moved 50 cents lower, peaking out at a 90-cent July premium in early March. Now it's only a 50-cent. We see that spread, especially with the acreage report out in here right now. We think that spread is going to continue to trend lower. If you're going to put a bearish bet out on the markets, it would be on this corn spread right here. As we get towards our next chart, I'm looking at a November soybean continuous chart in here right now. My red horizontal line is at $14.50. Maybe we could have put it at $15. $14.50 was about that 2011 high. It was also the 2021 high. I think with the higher bean acreage number in here today, that $15 mark on November soybeans is the high water mark unless we have a major crop issue coming up. Okay, if you're a speculator, you're probably looking more towards new crop corn, pushing that on the long side, than looking over here on beans. From a marketing standpoint, this report tells us we need to get on our toes and push along a few more bean sales and get some additional downside price protection in place. As we get over to the July Chicago wheat contract, we have that red horizontal line at $9. And as you can see with the war breakout, once we got above $9, this market quickly ran towards a 2008 high in that 1275 area. This report on wheat, you have to really say it's non-bullish. Okay, it's not a bearish report. It's not a bullish report. We call it more non-bullish. Well, if we're not getting bullish information in here, does this market gradually leak lower and then head down towards that $9 area, which we do need to call support? Wheat is sitting in a position right now where it needs that next bullish spark if we're going to appreciate. We didn't get it from the report, and it might be a tough time of year right now to get it on weather. Now we're going to get over to the December corn continuous chart, and we had a breakout in here today. D's corn traded up limit. It couldn't quite get to $7, but we have on here the red horizontal line at $7.75. As you can see, that's near the high of 2008, 2011, and in the drought rate of 2012, we peaked out at $8.50. Here this year on old crop corn, both the March contract before it went off the board traded near $8. May peaked out at $7.75. So if you're a bull in the market, you're looking towards its December corn contract, especially with the lower acreage figure. As we want to wrap things up in here right now, the bulls, like we said, are really looking at new crop corn. But what we want to point out is specs are net long already a near record 400,000 contracts, and most of their position is an old crop. Now, do they focus on the old crop? Is that starting to trend a little bit lower in here right now? Or do they say, hey, we want to get out towards new crop? The other thing is, if your bet is with inflation or war or sharply higher crude oil prices, it'd probably be better placed in the corn market, okay, than anywhere else. So again, that puts a layer of support underneath here on corn. We're not saying corn is heading to $7.50 or $8 a bushel, but with this report, corn has support. Like we mentioned before, wheat and beans are just basically non-bullish. I mean, there's nothing there that you can grab a hold of and say, we got to make that next leg higher. and a default figure, if it's non-bullish, it actually turns into a little bit more of a bearish argument. We think bearish spreading, we already highlighted it on the corn market as the focus shifts towards new crop. We think the same thing could occur in here on soybeans, as you've got old crop beans at around $1.80 premium to new crop. I mean, you put yourself in an end user perspective, why pay that kind of a premium if you can wait till when new crop is available? You know, we also think with bear spreading going on, the focus shifts towards new crop. Hey, the weather market's just beginning. Tomorrow is the first day of April. You know, this volatility, it will be strong in here. If you have some suggestions on upcoming webinars, feel free to give us an email or drop us a call in here. We'll probably update some supply demand tables on our daily advisory report where ending carrot levels can be at. Again, tune into our webinars. Any questions, let us know. Have a great day.